Financial freedom is like a dream come true for all of us. Financial independence means that you do not have to worry about your livelihood and future. May all your hobbies be fulfilled and you may enjoy life to the fullest. If you are not from a wealthy family, then you should make a proper plan for your future and work according to this plan for financial freedom. Financial freedom can have a different meaning for different people. For some it may mean being debt-free, for some it may also mean that there is no need to work every day to earn money. However, financial freedom is achieved when you have a lifetime provision of money in the form of interest or dividends or profits from business, so that all your needs can be met. Experts said that one cannot talk of achieving financial independence by expecting earning in future. Financial freedom is achieved either by having money in the bank or by having cash flow that meets your needs no matter the circumstances. In either case, it is important to start planning early. Without a plan, the dream of achieving financial independence will remain a dream. According to expert, you can get financial freedom by following these 5 steps. Number 1, estimate income and expenses. For financial freedom, first assess your current financial situation. In this you include your total income, including job, house rent, etc. After this, include all your expenses like loan repayment, phone bill, food and drink expenses, etc., and also include the expenses in the near future. If the remaining amount after deducting the total expenses from the income is 5 to 10% of the total income, then you need to seriously consider the management of your money. There are many celebrities we can learn from to make spending money work. In 1958, Warren Buffett bought a 5-bedroom house for $31,500 and hasn't moved out since. He can buy a bigger and more expensive house. But his frugality is probably the reason why he is one of the richest people in the world. Kanye West, on the other hand, isn't afraid to show off his money. He lives in a $20 million mansion. And at one point, with $53 million in debt. The difference between the two super successful gentlemen: Buffett didn't spend more than he needed, and West spent money he didn't have. The truth is that a lot of rich people don't look like rich people. Mark Zuckerberg literally wears the same boring t-shirt and jeans every day. Buying less stuff can actually help you get rich, which is why these rich people have achieved financial freedom. Spending less does 2 things in your favor. 1, you will have more money to set aside for your financial freedom. 2, you'll learn that you actually need very little stuff to survive, which also helps you set aside more money. Number 2, set a target before investing. Before investing the remaining amount of income somewhere, decide your goal. This could include a goal of buying a house in the next 5 years, or creating an emergency fund, or buying a car after 3 years, etc. Once you set such goals, you develop the habit of saving. Goals should always be set with a time limit. It is necessary to create an emergency fund for sudden health problems and accidents. By doing this you will know how much money you will need after so many years. Number 3, choose investment product like this. The level of risk in the products available in the market for investment varies. If you invest in the stock market, then there is more risk, whereas in fixed deposits, the risk is negligible. It is generally believed that the higher the risk a person takes, the higher the return in the same proportion. However, losses are also likely to be in the same proportion. Therefore, know in advance about all types of risks related to the investment option. It is important for you to know that market risk, interest rate risk, liquidity risk, inflation, etc. affect investment. These have a direct impact on your investment. To avoid this, do proper research. After this, according to your income and goal, select the investment product and invest. To achieve financial freedom early in life, you need to learn and rely on the formula of compounding. Compounding your money has 2 components, time and return on investment. The longer you stay invested in quality investments, the higher the returns you will get. That's why it is important to start saving early in life. For this you should first save and then spend. Despite starting your investment with planning, you may incur losses due to various reasons. It is not completely under your control. For this, it is necessary that you keep monitoring your investments from time to time. Investment options and returns on them keep changing with time. That's why it is necessary to invest in the right place at the right time, so that maximum returns can be generated. Number 4, make sure to create an emergency fund. If you haven't created an emergency fund yet, don't delay. Do this because no one knows when the bad times start. Build an emergency fund to tide over the bad times. For this, stop your extravagance and put this money in the emergency fund. It will help you in your bad times. 5. Insurance. When you are young, you do not realize the importance of having an insurance policy. An accident or any untoward incident can ruin the life of not only that person but also of his family. To protect yourself, you need to take comprehensive medical insurance and a term policy. At a young age, you will have to pay less premium for this. If you have the responsibility of the family, then buy adequate life insurance, term insurance. Take health insurance along with life insurance. Take health insurance for the whole family. By doing this you can secure your family financially. If you want to keep watching such interesting videos for free every week, subscribe to this channel and press the bell icon. Share this video with your friend and family. Thanks for watching.